Check, check, mic check. All right, this thing looks good. Let's get rolling. Good morning, evening, everyone. Happy to be back here. And let's take a look at the week. Want to run through some of the things that we're seeing as we close out the month of March. This entire month, since the beginning of March, I had mentioned to you that we were likely to consolidate based on historic seasonal tendencies. And we're going to take a look into that as we close out the month of March. So let's go ahead and get to it and see what we can get for this week. So we'll take a look at a few things this week, starting with economic calendar here. So this week, we've got a few, relatively less volatile week than last week. You do have some Fed speakers, but they're not going to really make a difference until Friday's Fed speaking. You also have Thursday's unemployment claims. So this is where you're going to get either a nice reversal, you'll see a low of week or high of week, or you will see a major expansion in one direction. So keep an eye out for Thursday, as it will be one of the things to watch this week. So really that's the biggest one. You don't have you have some medium items here, so it should be easier to see some of the imbalances that occur. So keep your eyes out for that and watch out for those things this week. So let's head over to the charts. A couple of things I haven't really zoned in on for quite some time, but you can kind of see here we've got our monthly treasury note futures, 10-year treasury notes. And you can kind of see they're starting to wane, going down. The cost of them is going down. And then when you look at the yields, coincidentally, from a monthly scale, all these yields are going up. They have been going up since the 2020 timeframe, right? So if you look at this from a really major macro scale, you can kind of also see that we have this low having been broken twice, right? And then you also have this low, relative equal low down here, having been broken with a low, high, lower, low, higher, high. Yes, we can come down and retrace and catch this here, but this area here, I would expect for us to maybe come down, fake some people out that we're lowering, and then it's going to probably increase in bond yields are likely to continue increasing. I think we've had a change in state of delivery already from a monthly perspective, and from a weekly perspective, we can kind of see this whole range here. We consolidated and broke above this whole area of consolidation here. So we might come back down, yes. We might come back down here. If we come back down into this area, that's permissible as well. But this area is where I'm looking for bonds to remain. Likewise, so bond yields going up. Let's take a look at dollar as well. So dollar on the monthly, we've got a bit of movement here. We see that we have this consolidation here. We could not break above it before heading lower over in 2002. So all the way up until 2020, we got to around here, right? Dollar continued to rise, all easing, which happened. And then we got into 2022. We hit a key monthly level in 2022. Started to drop, retrace a little bit. Started to retrace a little bit here. And we maintained above this balanced price range here. Let's see if I can roughly above. Well, it's not going to let me draw this, is it? That's weird. Let's try this again. The hell? I don't know why this is not letting me draw a freaking box here. It's really weird. Oh, shoot. It just had me draw a whole bunch of them. It was taking too long. Okay, cool. So we have this whole range that you see here, right? We've been consolidating around the top portion of that range. And so going to continue to observe this over time, right? We want to see if dollar is going to continue and break away from this consolidation here. It hasn't successfully been able to go any lower than this buy side imbalance that you see down here. And so I'm going to take this range off briefly so we can see what we see over here. So let's go and mention this here. And we will mark that blue so we can kind of see this monthly fair value gap. You kind of see how we dropped down into this fair value gap, which also served as a breakaway gap as well. So we've come back down here into it a little bit. We've actually returned back to it. Kevin Zhu, Friday is closed. This upcoming Friday, we definitely have some stuff going on this Friday. I don't see any indication that this Friday is closed for Easter. Is that what you're talking about? Easter Sunday. Let me see. For March 31st, Kevin Zhu. I think for equities, what day is equities closed for trading in March 2024? Let's see. Let's look at New York Stock Exchange. Okay, so we are looking at March 29th on Friday. It's called Good Friday, right? So markets will be closed, regular, normal trading, New York Stock Exchange, but futures markets will be open for half a day. This is oftentimes the case, and those days don't count as a true trading day. They'll count as part of Monday's trading day. So even if you do trade on Friday, it's not going to count as, it's going to count the same as Monday. So you should be able to have a half day trading. So trade at your own risk though. You won't need to trade that day if you don't want to, and I would not recommend it. The volume is quite less. Volatility will be less. There are going to be usually there's one good trade and that's it. If you don't catch it, you're done. The rest of the afternoon is not worth trading. So we can kind of see back to dollar. We see how we've traded down into this. We could not break past this monthly buy side imbalance. And so we continue to reach up into this inversion fair value gap. We reached up into it, came back down, came back up. So my thoughts are, if we can break and close past this monthly inversion fair value gap, which is now a balanced price range, if we can close above that, then we will be in for a market to go lower. But if we can't close above that, if we continue to not break above the midpoint of this and are unable to close above that, combine that with the fact that the government just prevented a stopgap measure to stop government shutdown, TBD on how that's going to impact markets, but we'll have to see if we can get up and out of this range. If we can, then of course there's this whole range we can reach for, as well as this high here, which happens to be an intermediate term high. On the weekly charts, we saw that last week, dollar rose, it expanded higher, expanded to the rejection block up here and then some, and we closed right at that premium monthly inversion fair value gap low. So it remains to be seen what this is going to do, but I kind of see this as one big bullish order block. We traded down into this down close candle here. There was a tiny little, and we'll see this on the daily chart, I think, but there's a tiny little gap there. Let me get rid of these as well. These are no longer salient. Let me get rid of this too, and that should be fine. So we see that we have obviously like all these buy side liquidity areas to run for. Yes, we do have some down here, but we failed to go below this level. So I am of the impression that dollar wants to head higher. but we are in a precarious zone, and we are entering the last week of March. So if we head higher and we fail to reach above this inversion fair value gap on the monthly level, then we might just go take out this high and then reverse as well for the month of April. So that's what I'm looking for price to see, is to target. I want to see it target this high here for dollar, right? So I want to see it target 104.973. So what does that mean for equities? Well, if markets were coupled together, it would mean going down as dollar goes up. But we'll see. Equities have been a little decoupled lately, so from dollar. So this is a